Hi, I'm Tammy DeWolfe with Gibson Sotheby's, and I'm here interviewing Sofia Travayiakis with Mortgage Networks. Hi, Sophia. How are
Tammy.
you?
Good. Thank you so much for having me, and excited to talk to you a little bit about mortgages today.
So all been hearing about this program, MASSdreams, and I really don't know that much about it. I think that you need to live in a certain town and buy in a certain town to get some sort of grant. That's all I really know. So can you expand on that?
Yeah, this is a great first-time home buyer program that they're offering in what's called COVID distress areas. And the important thing to know about this one is actually where you currently live. It doesn't matter where you buy. So the important thing to qualify is where you currently live. And surrounding areas right now, like in a broad general, or all of Boston, there's Quincy in there, Framingham's in there. And then it kind of goes up north, up to like Peabody, Haverhill, and then goes west like Worcester. So if you currently live in some of these towns now, you have to only have lived there for 30 days. That's what's great. So
That's it? Only 30 days.
Yeah. So if you have, like, let's say a child that's been living at home that lives at your address, and they can use it. They do have to show some sort of utility bill, or let's say they're a student or a child. Like I said, they could show their cell phone bill if the address is currently at that location.
Okay.
And it doesn't matter where you buy. So you could live in Boston, move to Westwood, let's say, and get this $50,000 grant that they're offering. So it's a free up to $50,000. It is based on your income.
Okay.
But in Boston, you can make up to about 179K. So it's pretty
forgiving
on the area median income, which is about 135% of area median income. So
have you done any of these mortgage programs for any of your clients?
I have 2 in process right now. So it just got released October 1st. So we have 2 already that are in the process. They're kind of my guinea pigs on the program and how it works, and what kind of documents we need to prove this. So definitely something that we're moving quickly on, and a lot of people are taking advantage of.
So do they get the money? So this is like a down payment, right? So they can't have access to the money until they close on the mortgage, correct?
How it works is they can use the 50,000 up to the 50,000 as a down payment, and they would put 5% down. The rest of the money they can put extra if they want to. It doesn't only have to. Let's say they wanted to put 10, they can use 5 of the grant money, and then the rest could be their own money. Mm-hmm. If there's leftover money from that 5%, that's when it goes to closing costs. You can pay for property taxes, insurance, and on the one I'm doing now, I'm actually buying down the interest rate. So I'm buying down their interest rate by like 1.5% to help their monthly payment go down. So you can use up all the money, as much of the 50,000 as you can, or all of it, so that all around is allowed to be able to use all of that money, and no money is left behind.
So is there a time frame when they can actually apply for this program, or is it when the money's runs out, that's it?
That's a good question. A lot of people have been asking me when they think the money is going to run out. And I looked up the grant money. They have quite a bit of money. I can't imagine it would run out maybe in the next 12 months. But I think it's going to be around for a little while, because even if I did the math at $50,000, if every person got this, the average loan amount in that bracket is about $500K. Yeah. The money wouldn't run out in more than 12 months. So I think that's going to be around for a little while, actually.
Can they use that program to purchase a single family home, a condo, or a multifamily home? Any of them, or
all of the
above? Specific? It is. Okay, that's good to know.
All the above. So multifamilies as well. It just has to be owner occupied. So it can't be investment. You can't have owned a home in the last 3 years. So I had somebody this morning that called me on it. They had sold their house, but haven't owned in the last 5 years. They qualify. So as long as you haven't qualified in the last 3 years, and it's free money. You don't pay it back when you sell the house. You don't. Right now, there's a little bit of a question if the IRS is going to tax them on it. From what we've heard, they're not going to be taxed on it, on that 50,000. So that'll be great. But it's a super program if you qualify. So it's just qualifying for it, making sure you want to talk to a local lender. Not every lender is approved to do these loans.
Okay.
So definitely give me a call if you're interested, but it's not every bank can do them. And it's just super for, I think, the younger first-time home buyers that are trying to get in the market. They're trying to help with higher interest rates now. get into the home now and then refinance later.
Well, I think it's really smart to buy down a point if they can. But it sounds like a great program. Somebody had tried to tell me about it like early on, and they basically told me just the opposite of what you just told me. So I'm happy to hear that this program is a little bit more user-friendly.
It is. It's actually, they really tried to make it as easy as possible to qualify for it. Of course, you still have to qualify.
Right.
And you do have to go through what's called the Massachusetts Housing Program to qualify for it. So, but other than that, it's truly a great program to be able to get $50,000 to help you buy a house.
That's pretty awesome. All right. So talk to me a little bit about all these different arms that I've been hearing about. Seems like people are doing the arms to lower the interest rate for a short amount of time. Can you expand on that a little bit more? Is that something that everybody's doing these days, or are they really just buying down points? What exactly is going on?
So everybody's situation is different. ARMs are adjustable rate mortgages, so means it's fixed for a certain amount of time, typically 5, 7, or 10 years. And your interest rate is fixed for those amount of years. And then after that can adjust. So you definitely want to, if you're looking at doing an adjustable rate, finding out when it does adjust, how much could it adjust to? What are what's called the caps on that loan? The ARMs are super aggressive right now, more than, let's say it's about a point lower than it would be for a 30-year fixed. So if you're able to qualify for the payment on the adjustable rate, and it helps you kind of comfortably make a payment on a home versus a 30-year fixed, especially because we're predicting that interest rates will drop again at some point. If it's not in 2 years, maybe 3 years. I think it will be sooner than the 2-year mark that they're predicting. But if you can get into a home and have, let's say, a 7-year fixed, there's no restriction on when you can refinance. So that's why a lot of people are choosing to do the adjustable rate up front, because eventually refinancing is an option. And
So,
you can.
I didn't know that you could do an ARM for 10 years. I've always heard 3 to 5 to 7 years, but 10 years, does it drop it any further than a point lower, or is it just basically a point lower than the current interest rate?
So the 7 is probably the most aggressive. The 7's about a point lower than the 30-year fixed right now.
Okay.
Again, depending on the type of loan you're doing, but if you're looking at just standard, it's about a point lower for the 7-1 ARM. The 10-1 is closer to the 30-year, probably half a point lower. So you definitely want to do the math, and probably what I do for my consumers is do a spreadsheet and show you, okay, here's maybe a 7-1, here's a 10-1 ARM, and then maybe a 30-year fixed, and see the payment differences. Does it make sense? And then I show them a chart of after 5 years, how much have you saved by doing that adjustable rate? And it's quite a bit of money, because even if the payment, you can always pay extra to the payment, to the principal, but it's something to help you save up front initially so that you can, when you do refinance, you have enough money saved up to pay the closing costs to refinance at that time. But the adjustable is just something that a lot of people were afraid of in 2008, because there was what's called negative amortization loans. That exist right now are very good adjustable mortgages. They have caps on it. You're paying principal and interest, and they're very safe loans to look into.
Okay. And I've been hearing a lot of people talk about buying points down to on a 30-year fixed. I've heard that sellers are paying points to get the buyer into the housing market to, make their house more appealing to the buyer, right? Have you seen a lot of sellers giving a credit towards buying down that interest rate for the buyers?
Yeah, and then you can do this a couple ways. Sometimes it's called a 2-1 buy down, where they're paying extra points to do that.
Okay.
I think the most beneficial to a buyer is if a seller offers to pay closing costs, because even the closing costs, you can buy your own rate down and talk to the lender about buying. I think closing costs is huge, because on an average loan, they're around $5,000 to $10,000. So
Okay.
getting money to pay for that helps. And if they're willing to pay more than that and buying down the rate, of course it helps. I've seen more sellers do closing costs than buying the rate down or offering just a certain dollar amount. So however you want to use that. Do you want to use that money to buy down the interest rate or pay for the closing costs? So definitely talk to your lender about that, which one's better for you specifically.
Okay. And for the people who don't know what a point costs, what does a point cost?
Good question. So a point is 1% of the loan amount. So if you're borrowing $500,000 as a loan from the bank, 1% would be $5,000.
Gotcha.
So let's say if the interest rate that day you were getting was 6.5, let's say, which is about where they are now on a 30-year fixed, conventionally anyway. You could, if 1 point would buy that rate down, let's say to 5.875 or 5.6, you would pay that 1% or that $5,000 the day of closing, and that would help buy down your rate. So that's where we're saying the seller's willing to pay that. That's great to help you save on your monthly payment.
Okay. And there seems to be still some investors in the marketplace these days. What type of programs, mortgage programs, are they utilizing? I know that some people are, they're doing 1031 exchanges, but some of them are still getting a mortgage, even though they're doing a 1031 exchange. So what kind of programs do investors utilize at this point in time where the interest rate's a little bit on the higher side?
Yeah, for investors, we're looking at more what's called portfolio loans or a lot of adjustable rate mortgages right now on the investment side. Something that's maybe fixed for 7 years has a better interest rate on an investment loan than a 30-year fixed.
Okay.
And typically those investment loans the investor's not keeping them for very long, or they're paying them off or flipping them. So an adjustable rate is really popular right now, and probably around the 6.25 range for an investment property. So that's something we've been doing more, is looking at adjustable rate mortgages, how to lower that payment so cash flow is better.
And what are you seeing buyers putting down for investment down payments? Is it 5%, which is typical, but in today's market, what are you seeing buyers putting down?
For a down payment as an investor?
Yes, sorry.
You typically need 25%.
25%.
Yeah.
Okay.
Yeah, that's going to get you the best rate as well. We have one investor that wants 30% down, and they give you a discount on the rate if you put 30. So right now they're looking for, more commitment from the buyers, putting a little bit more down, and it saves you on the interest rate. So the more you can put down as an investor right now, the better rate you'll get.
Wow. That's some really great information. Thank you. I think that this will be super helpful for a lot of individuals that have been questioning things. I know I've been getting questions on the MASSdreams program and the ARMs and points. So hopefully some of my buyers will be able to call you, and hopefully, we can continue to do some business together. And if anyone has any questions, either direct message me or comment below. Hope you have a great day.
Thanks, Tammy.
Thank you.